If you are new to Deriv and you keep losing trade because every strategy seems complicated, then this video is for you. Today, I will show you one of the easiest trading strategy beginners can learn. No complicated indicators, no confusing setup, just simple method you can practice before risking real money. Hi everyone, welcome to FOLA'S Trade. On this channel, I teach beginners how to trade on Deriv, understand synthetic indices, and improve their trading skill. If that is the kind of content you're looking forward to, don't forget to subscribe. Let's get started into the video. The number one strategy I'll be talking about is choosing a market. Choose a market. Don't jump from volatility 75 to crash 500 to step index to volatility 10 and the likes. Don't jump from one market to another, because what will be the result of that? Confusion, inconsistent results, slow progress, and that is it. Why should you follow just one market? First, every market has its own personalities. Just because two markets are on the same platform doesn't mean they have the same way they go or how the market moves. Volatility 75 moves very fast and can make large price swing, but 1000 is known for sudden upward spikes. Crash 500 experience sudden downward drops, and like they all have different personalities. So each market has its own rhymes, rhythms, volatility and behavior. So you cannot take the behavior of volatility 75 to the way the market is going in volatility 75 and take it into that of like volatility 25, or take it to step index. Like they have different personalities and behaviors. So learning one deeply is much easier than trying to master all of them at once. That is it. You start recognizing pattern. The more time you spend watching one market, the more familiar it becomes. You will begin to notice how it reacts to support and resistance, when it trends strongly, when it moves sideways, how it behaves before major moves, and the likes. This kind of experience can't be rushed. Is when you start learning it or start making use of it, that's when you kind like get to know it or become familiar with it. The third one is you will build experience, like you will build confidence faster. You will build confidence faster when you keep switching markets. Every chart feels unfamiliar, but by sticking to one market, you will make decision with more confidence because you trade something you understand. Confidence comes from experience, not from consistent changing markets. Now, the second strategy I will be talking about is trade with trend. Trade with trends. One of the easiest way to increase your chances of winning a trade is to trade with trend. Many traders lose money because they try to predict when markets will reverse. Instead, learn learn to follow the direction the market is already moving. The market moves in two directions: uptrend and downtrend. Now, what is uptrend? And what is an uptrend? An uptrend happens when the market keeps making higher highs and higher lows. In this kind of scenario, the trading view the trade view is to look for buying opportunities during an upward trend. And the downward trade, what is a downward trade? A downward trade happens when the market keeps making higher highs and lower lows. The trading idea is to look for a selling opportunity during a downward trade. Now, the golden rule on this is don't buy in a strong downtrend, don't sell in a strong uptrend. The third strategy you should also work on is wait for support and resistance. One of the biggest mistake beginners make is one of the biggest mistake beginners make is chasing candles. They see one big candle moving fast and jump into trade out of fear of missing out. Most times, the trade ends in loss. Instead, learn and wait. Wait for a price to reach an important level. What is support? Support is a price area where the market has previously stopped falling and started moving back up. Think of it as a floor where buyers often become active. If price reaches support, don't enter immediately. Wait for confirmation that buyers are stepping in. What is resistance? Resistance is a price area where the market has previously stopped moving and stopped and started moving down. Let's see it as a ceiling where sellers often become active. Again, don't sell the moment the price touches the resistance. Wait for the confirmation that sellers are taking. Don't chase candle. The golden rule about this is don't chase the market. Let the price reach a level. Wait for confirmation, then enter with confidence. Remember, the market will always create another opportunity. Missing one trade is better than taking a bad trade. Always remember that. The fourth strategy is risk management. If you only remember one lesson from today's video, let it be this. Risk management is the most important than having a perfect strategy. Many traders don't fail because their strategy is bad. They fail because they risk too much more on a single trade. Rule 1 concerning risk management. Never risk money you cannot afford to lose. Trading always involve risk. There is no strategy that wins 100% of the time. That is why you should never trade with the money for rent, for school fees, or for other essential expenses. Only trade with money you can afford to lose. Number 2, risk 1 or 2% per trade. Professional traders focus on protecting their capital, and I will advise beginners to also start learning that as you start in your trading journey. The only amount you can try to risk is risk 1% of your account per trade, 1 or 2%. This means that even if you lose a few trades in a row, your account is still alive, giving you opportunities to recover. Remember, the goal is to keep protecting your account. It is more important than making quick profit. Never revenge trade. One of the biggest mistake beginners make is to do revenge trade. How it happens: you lose one trade, you get angry, you increase your lot sizes, you enter another trade without waiting for proper setup. Instead of recovering from your loss, you often lose more. That is the result of getting a revenge trade. A losing trade doesn't mean you have to win it back immediately. Accept the loss, stay calm, and wait for your next high quality setup. The last but not the least is to learn to practice first. One of the reasons I will recommend Deriv is that there is always a demo account that has a virtual fund for you to practice how Start placing trade and learn how to trade before wasting your resources. Practice for weeks first. Only move to real money when you are consistently profitable. And if you are yet to create a trading account, there's a link in the description of this video. You can create a demo account or to create a real trading account there. Remember, the best strategy isn't the one with the most indicator. It is the one you understand, follow consistently, and combine with good risk management. Master one strategy before looking for another. If you found this video helpful, give it a thumbs up, subscribe to this channel. Let me know in the comments what's the biggest challenges you are facing as a beginner trader. I will make more videos to help you improve. Bye and see you in my next video.